Hello all, I'm Clay Baker and welcome to Motonexus. Today I'm not in the shop, I'm in my office and having a few thoughts about something that keeps coming up online and at the auctions and whenever I talk to other enthusiasts. And this is the motorcycle industry is dying. Maybe it's already gone. Sales are down, all of this stuff that's going on. So I want to address it a little bit. So among American motorcycle enthusiasts, there exists this peculiar cottage industry of doomsaying. Motorcycling, they assure you with the confidence of profits, is dying and possibly already dead, just too stubborn to lie down. Harley-Davidson's decade of disappointing headlines has proved to be ample fuel for this perpetual wake. And I'm delighted to report that the corpse keeps twitching rather vigorously. The motorcycle market in the United States is actually growing, projected to expand at a compound annual growth rate of roughly 4.51% through 2033. Registered motorcycles have doubled since 2002, reaching about 8.8 million in 2023. That's the highest level ever. It's a record high. Motorcycling isn't dying, it's just not wearing as much black leather and Milwaukee branding as it used to. Which brings us to Harley-Davidson's November 4th, 2025 earnings call. I'm a professional investor and someone who actually rides and restores and works on motorcycles, a combination that breeds a special kind of skepticism when I listen with the appropriate level of disbelief to earning calls such as Harley-Davidson's. There's something delightfully American about a company whose customers are buying fewer motorcycles yet somehow producing earnings that would make a Vegas magician jealous. Harley-Davidson just reported third quarter results that tripled analysts' expectations. And if you're confused about how that works, you're not alone. But you're paying attention to the wrong numbers. The headline figure tells a fairy tale. Adjusted earnings per share rocketed to $3.10, up from a measly 91 cents last year. Wall Street had penciled in $1.38 in estimates. So naturally, everyone's thrilled. Revenue climbed 17% to $1.34 billion in total revenues. Operating income jumped 349% to $475 million. And net income ballooned from $119 million to $377 million. These are the kind of numbers that get CEOs invited to ring bells at stock exchanges, and guys like me very excited about where do I buy shares. But here's where it gets interesting, in the way that a card trick gets interesting when you spot the sleight of hand. Harley-Davidson shipped 36,500 motorcycles globally in the quarter. Remember, that's shipped out of factories, not sold to customers. A 33% surge that sounds impressive until you realize that actual retail sales, when real people with real money buy real motorcycles and drive off happily, that fell 6% worldwide. North American sales dropped 5%. European sales cratered 17%, and Asia Pacific declined 3%. Only Latin America, bless their hearts, showed any enthusiasm with a 16% increase in sales, retail sales. So the company is shipping more motorcycles to dealers while fewer people are buying them from dealers. My first thought is, are they stuffing the channel? Dealer inventories, perhaps not coincidentally, fell 13%. One might call this channel stuffing, but that would be indelicate. Let's just say Harley-Davidson is very confident in future demand or very good at persuading dealers to share that confidence. The genuine magic trick here, and you've got to admire the audacity, is what happened with Harley-Davidson Financial Services. Remember that story from a little while back? The company struck a deal with KKR and PIMCO that freed up over $1.2 billion in discretionary cash and transformed Harley-Davidson Financial Services into what's known as a capital-light business model. They don't have to pump a bunch of money into it to keep it going and to get something out of it. Translation, they sold off a big chunk of their financing business, took the cash, and voila, instant earnings boost. This is perfectly legal, occasionally sensible, and about as repeatable as a solar eclipse. You can only sell your finance arm once, much like you can only sell your furniture once when you need to pay the rent. With all this windfall, management announced a $200 million share buyback program because nothing says we believe in our long-term prospects quite like reducing the number of shares against which mediocre future earnings will be measured. You buy back your own stock when you have no better investment to make. This was done to keep investors in the stock, which I don't like. As a professional investor, this bothers me. I don't mind share buybacks at all. It's a great way to not only boost your share price, but to return capital to the owners of the company, the people who own shares. It doesn't matter if you own 1 share or 1 million shares of Harley-Davidson. When you get a dividend or a share buyback opportunity, that's the company giving you your money. So I don't have a problem with that. But in this case, when the company needs to act entrepreneurial and grow, this is not a good move. This doesn't look good. This is a board level decision. I don't think this was made by the new CEO. So I'll give him a much bigger chance than what the numbers are saying in this one earnings call. Oh, and by the way, they absorbed $27 million in new tariffs during this one quarter. One might observe that tariffs are essentially a tax on consumers, but when you're a premium American brand selling expensive toys to aging enthusiasts, you can probably pass those costs along without too much fuss. The real question is whether those enthusiasts will keep showing up, given that they're currently showing up 6% less frequently than last year. So here's the bottom line. Harley-Davidson's Q3 performance is a masterclass in modern corporate finance. Weak underlying business performance transformed into spectacular reported earnings through one-time monetization of assets. It's the equivalent of selling your car and declaring yourself wealthier because you have more cash in your pocket. Technically true, but now you're walking to work. The company talks about dealer support and brand connection. Those the phrases are in quotes, as part of its long-term strategy, which is essentially corporate speak for, we hope people start buying motorcycles again. People are buying motorcycles. They're just not buying your motorcycles. And frankly, when I look at Harley-Davidson's lineup, all I see are 24 versions of the same bike. Make something for everyone, please. Start at the lowest level with something that kids can ride and work your way up. The consumer today doesn't want 1,000 pounds of Milwaukee steel. What they're looking for is a middleweight bike that's reliable and easy to maintain. That doesn't exist in an American-made motorcycle. So let's get with it. Let's make motorcycles that are simpler, lighter weight, and affordable. So the bottom line, I'm speaking as a professional investor. Harley-Davidson's Q3 performance is a masterclass in modern corporate finance. You've got weak underlying business performance transformed into spectacular reported earnings through the one-time monetization of assets. They sold something, now they got a bunch of cash. It's the equivalent of selling your car and declaring yourself wealthier because you have more cash in your pocket. Technically true, but now you're walking to work. The company talks about dealer support and brand connection as part of its long-term strategy, which is corporate speak for, we hope people keep buying motorcycles. Meanwhile, they're launching share buybacks with money from selling assets rather than from sustainable business operations. None of this means Harley-Davidson is doomed. The brand remains iconic, and there's always a market for rebellion you can finance at 6.99% APR. But when a company's historic earnings growth comes primarily from financial restructuring, while actual customer demand declines, it's worth asking, what happens in Q3 of 2026? When there are no more finance arms to sell and retail sales are still heading in the wrong direction? The answer, as always, will be revealed in the fullness of time. Until then, enjoy the show, and please, keep your helmet on. It's going to be a rough ride.